In the CBS News Money Watch, no end in sight to the housing slump. The government reported today that construction of single-family homes plunged more than 5% in November to the lowest level in more than 16 years. The Federal Reserve proposed new rules today to help future home buyers avoid the nightmare of foreclosure. Among other things, lenders could not make loans unless they had proof of a borrower's income. And lenders would have to make sure subprime borrowers set aside enough money to pay for taxes and insurance. The mortgage meltdown is having an impact far beyond borrowers and lenders. From Monticello, Florida tonight, here's Kelly Kobiea.
This is your gym?
As the chief financial officer for Jefferson County Schools, Hal Wilson never imagined the subprime mortgage crisis would affect his students.
This situation is unimaginable.
The district had money to soundproof the loud gym and even louder cafeteria.
Everybody get it?
And to give teachers a big holiday pay raise. That is until November 29th, the day Hal calls Black Thursday.
You had no way of making payroll?
No, we had no money and no advanced knowledge.
The money to stock the kitchen and pay the teachers was in a state-run pool that invested in funds tied to subprime mortgages. And when that word leaked,
that money was just flying out.
And the billions every day.
And the last person in line is
us.
Florida is one of 45 states that offer investment pools to local governments as a safe way to earn interest on their cash. A handful of those pools invested in securities backed by subprime loans. Like Florida, Montana had a run on its fund and lost about 20% of its assets.
Only a fraction of Florida's fund is invested in subprime mortgages. Still, it's enough to put millions of local government dollars at risk. And even worse, shake confidence in the state's ability to safely manage money.
To restore trust, finance professor William Silber says the federal government may have to step in.
And if we see the Federal Reserve making credit available to the institutions that have a temporary shortfall, this will also not mushroom into a run on the banking system the way we had back in the 1930s.
Florida is now trying to reassure local governments their money is safe.
I think we're in pretty good shape.
Hal Wilson isn't so sure. He was able to pay teachers, but the repairs are on hold.
But you do have the money, you just can't get the money.
Well, do we have the money?
Some advisors have told him the money tied to subprimes is worthless, and local governments like Hal's may have to swallow the loss. Kelly Kobiea, CBS News, Monticello, Florida.
Now to a major shift in policy by the FCC.
Good, very positive at all. You know, where is the good news? In my travels, and as president of the NBA, you travel extensively, and I go into many towns and hamlets and villages in this country. And go into the department stores and into the dealerships, and I speak to the people and ask them how are things going, and I have not heard any good news. And that's the best indicator to me. I don't see, particularly in the major ticket items, if you talk about houses and automobiles, that's what drives the economy. There is no good news, and the recent reports on 10-day auto sales is another indication of where this economy is going. It's just lumbering along and not doing very well at all. And I think these numbers indicate the sickness that exists today in the economy.
Do you have any numbers on actually how many homes are being lost, how many people are losing their homes, any comparative numbers, how many more are losing them now as compared to before the recession?
I don't have any numbers before me. Dick, do you have any indications of that?
I don't. I mean, we are talking in percentage terms.
Could you use the mics, please?
We have these foreclosure rates expressed in percentage terms. Let me add that when we say foreclosure, we mean the beginning of the process, not the end where a home has actually been taken back by a lender. So we have delinquencies and foreclosures, foreclosures up. They're not as high as they had been, say, back in 1986, but they have been rising now for several quarters in a row, which is a disturbing sign. Foreclosures in process are just a little bit below 1% of loans outstanding, and we believe that there are somewhere around 45 million loans outstanding. So that gives you an idea of the numbers that we're talking about.
I'd also like to point out that
45 million.
I'd like to point out that another factor that has not been discussed here is which is also symptomatic, I think, of the economic condition of the country is the number of personal bankruptcies. And from our personal experience, we service about 250,000 mortgagors, make payments to countrywide to our company. And the number of bankruptcies we've seen are historic highs. There's been an enormous increase in personal bankruptcies in this country.
Mr. Mazzillo, being that housing is the last thing most people will let go, does this mean that more people are reaching the bottom of the barrel? They're really getting in bad shape?
Yeah, every indication that we have, and again from my personal experience and also in speaking to people in the industry, that it's true that people tend to, and you can see by these numbers, people will tend to do everything they can to hold on to their home. If you have a 1% foreclosure ratio overall, or let's say let's say 1.5 in the government loans, even the government loans, which tends to be the lower strata, that means 98.5% of the people are trying to hold on to their home. And they're having more difficulty, Lou, in doing that, no question about it, that people are reaching the bottom of the barrel, they're reaching into their reserves, in credit card loans are up, personal loans are up relatively high, so they're really stretching themselves today to try to meet their economic needs. Yes?
You mentioned initiatives to get housing onto the national agenda. Do you think it's more important in the short term of dealing with this delinquency and foreclosure problem to get the economy moving, to get the overall economic activity moving? And don't you think that perhaps, do you think that Congress and the President are skirting their responsibilities and not moving forward with some type of stimulus package now?
Well, there's no question that the resolve to the problem is job formations. And to stimulate the economy to achieve job formations, and using monetary, fiscal, and regulatory policy to do that. I wouldn't say that anybody is skirting any responsibilities. It's whether or not they're addressing them and addressing them properly. And to date, neither the administration or Congress has obviously successfully addressed the issues and attempted to put together programs that will in fact stimulate this economy. And home ownership is a major cornerstone in stimulating the economy. Historically, has driven the country in and out of recessions, as I pointed out in my prepared remarks. Yes.
Have you perceived that any of the announced candidates the President have moved to the forefront on the issue of housing affordability? And second part, has the administration failed to be a strong advocate of housing affordability?
Let me ask the second part first. The administration clearly has not addressed housing affordability, really going back to 1980. That has not been on their agenda at all. And that was culminated with the efforts by the Secretary of HUD to change FHA regulation to make it more difficult for first-time home buyers and low and middle-income people to own a home by increasing down payments and increasing monthly payments. So clearly the administration has been contra to the affordability, in their activities to the affordability issue. So it's not even not addressing it, they've addressed it in a negative way. In terms of any of the candidates coming forth, I think was it Harkin? Clinton made some statements relative to FHA, in fact, and we were very heartened by that, that increasing loan limits being one of the elements in bringing FHA back as a major player and as a leader, which they should be, in housing first family formations, low and moderate income people, by increasing loan limits, by lowering down payments. So we've had the first glimmer of hope from one of the candidates, but that's the only one that I'm aware of.
To follow up on that, would you describe briefly what kind of changes you want to see in FHA?
First thing we'd like to do is reverse the down payment requirement back to its original formula, which had been in existence for many years. There was no reason to change it. Secondly, the administration, or HUD, the Secretary, imposed an additional cash requirement by stating that no more than 57% of the closing costs can be financed. We want that reversed. 100% of the closing costs should be refinanced. So we want at minimum, we want the down payment to reflect back to the pre-1990 reform. We would like to have all of the closing costs financed. And we would like to have a reduction in the mortgage insurance premium. I think the ideal reduction would be to leave the 0.5% in and to eliminate the upfront charge of 3.8%. But as an alternative, we would accept the 3.8 upfront cost and eliminate the 0.5%. It used to be 3.8, and now they added 3.8 plus 0.5%. So to lower the PMI cost so that the monthly payment would be reduced on the average loan $35. Certainly that's a big number to low and middle income people. So we'd like to see changes in those three areas. And we'd like to see FHA become a leader not only in single family but in multifamily. Historically, FHA would monitor housing very carefully, and where there were weaknesses, where the private sector was not taking the lead, they would take the lead and stimulate the economy, stimulate housing. They have completely abdicated that responsibility and have taken a back seat. And as a result, we have this affordability and housing crisis in this country. Yes.
Your forecast was pretty gloomy. Do you think that the lower rates that are now out there will have any impact? We'll start seeing some pickup in mortgage lending and fewer foreclosures and delinquencies?
I think they'll have some impact, but you can see rates have come down very dramatically, and yet we've seen very little in terms of pickup in new home sales and existing home sales. Because rates alone, monetary policy alone, cannot drive this economy. It takes a coordinated effort of fiscal, monetary, and regulatory change in order to get the economy going again in a meaningful way. So the answer is yes, if they lowered rates, you'd see some pickup, but the bulk of the business being done today in mortgage product is refinances. People are just refinancing their old loan. In our industry, it represents 50 to 60% of the business being done today is represented by refinances, not new home sales, which is really needed. Refinances do not add anything to the economy, at least by my view of it.
Lebanese wife is with him, and other members of his family are expected to make it a full-scale reunion before the day is out. Doctors say Sisipio appears to be in good physical condition despite his recent surgery while he was still a captive. In Washington, embattled White House Chief of Staff John Sununu is said to be fighting to keep his job. The Washington Post reports that President Bush's son, George W. Bush, told Sununu last week that he has alienated cabinet members and other top Republicans. The report says the meeting was intended to prompt a Sununu resignation, but the Chief of Staff chose to fight instead. The President is hitting the road today to show his concern about the economy. Randall Pinkston has more.
President Bush calls his day trip to Florida and Mississippi a listen and learn session, another opportunity to hear firsthand what Americans think about the economy.
In just the last few weeks, I've sat down with workers, small business owners, corporate CEOs, bankers, economists, leaders in and outside government to make sure that we leave no stone unturned to promote economic growth.
In a meeting with the President, representatives from the real estate industry bluntly disagreed with the administration's view that the recession is over.
Absolutely not, and it's getting worse.
The President's problem is what to do and when to do it. Mr. Bush plans to announce his strategy in the January State of the Union address.
This group encouraged the President to take action now and not wait for the State of the Union.
We're going to keep working here now along the lines I've spelled out, and we're not going to do anything dumb.
Yesterday, that meant stopping short of any new proposals. Instead, Mr. Bush asked his cabinet to work harder on existing federal programs that provide training, benefits, and small business loans to hard-pressed Americans. And he repeated a familiar charge.
And it is a fact that I sent up to the Congress economic growth proposals over and over again.
But Mr. Bush is mixing his blame the Congress message with a new approach, calling for cooperation from Capitol Hill and urging voters to support the President's new economic plan once he decides on one. Randall Pinkston, CBS News, the White House.
And in Monday Night Football, Philadelphia prevented Houston from clinching the AFC Central Division title. A sore arm knocked Jim McMahon out of the game. But Jeff Kemp came in and passed for the game's only touchdown. Philadelphia's defense held Houston to only 6 points. The Oilers could have tied it with a touchdown.
That concludes our business to the standing church.
Countrywide Financial was the lender at the heart of the mortgage meltdown, but when business was booming, one whistleblower says the company went looking to influence the powerful in Washington, including members of Congress and a host of others. Cheryl Atkinson has this Follow the Money investigation.
At the height of the subprime boom, perhaps nobody gave out more risky loans than Countrywide Financial.
As America's #1 home loan lender,
but while the government debated how to regulate the mortgage industry, Countrywide pursued a shrewd strategy, attempt to curry favor among influential people by offering them sweetheart loans. Special terms included knocking a full point or 1% off a loan. On a $2 million VIP mortgage, that's a perk worth $20,000.
And that was the whole idea. It wasn't just to give them a good deal, it was to make sure they knew, or at least they believed, that they were getting a special deal.
Anthony Salerno represents former Countrywide executive Bob Feinberg. He worked in the VIP section that offered preferential treatment to so-called Friends of Angelo, customers referred personally by CEO Angelo Mazzillo. That includes Senators Kent Conrad and Chris Dodd, who just happens to head the committee that oversees the mortgage industry. They each received at least 2 VIP loans and are subject of a Senate ethics investigation. They declined our interview request but have denied wrongdoing in other interviews.
I did absolutely nothing unethical here.
No special deals. No one ever offered one.
But CBS News has learned that Countrywide's VIP program went far beyond 2 senators. VIP mortgages were given to President Clinton's former housing secretary, Henry Cisneros, and President Bush's housing secretary, Alphonso Jackson. Jackson's daughter even got VIP loan status when an internal Countrywide email noted her father is expected to be confirmed as Secretary of HUD. Also on the list, Franklin Raines, then CEO of Fannie Mae. Fannie Mae bought billions in toxic Countrywide loans that defaulted at taxpayer expense. And former Fannie Mae CEO James Johnson, one-time advisor to President Obama. Some of the most flagrant connections were with the House Financial Services Committee, which had oversight authority over Countrywide. Clinton Jones, a chief counsel for the committee, got VIP treatment, and internal Countrywide emails leave no doubt as to why. Jones is an advisor to ranking Republican members of Congress responsible for legislation of interest to the industry and of importance to Countrywide. A committee aide asked Countrywide to help his sister and brother-in-law after they got turned down for refinancing. Countrywide obliged, calling the staffer an aide to a senior member of the House Financial Services Committee, a big supporter of Countrywide's and very important to us. Congressman Darrell Issa is spearheading a House investigation.
This is a pretty vast attempt to influence government that did not benefit the American people in this meltdown of the economy around the world.
Democrats are blocking a Republican effort to subpoena Countrywide documents. Some of the people named in this report have said they didn't know they were getting preferential treatment. For now, it's unclear whether there was anything illegal and whether Countrywide was able to fend off regulations by winning favor with the right people. Cheryl Atkinson, CBS News, Washington.
And continuing now with the Follow the Money theme, attention taxpayers, your photos are ready. The Air Force today released 146 photographs from that infamous Air Force One flight to New York in April. The idea of the flight was to snap new
Those who favor raising a gas tax and spending the money on improving roads and other infrastructure say consumers would save about $80 billion on wasted fuel, and it would create millions of jobs. Jeff?
Okay, Priya. David. Priya, thank you. Of all the states, California may be in the worst financial shape. Governor Arnold Schwarzenegger has proposed higher taxes and deep spending cuts, but that may not be enough. Bill Whitaker has more.
The shine is off the Golden State. The bruising national recession plus political stalemate in Sacramento have left California with a whopping $42 billion budget shortfall. What Governor Arnold Schwarzenegger called a fiscal emergency,
our economy is crying out for relief,
is nothing short of a crisis.
We are running out of cash by February.
The country's biggest state soon won't have enough money to pay its bills, like freeway upkeep. Californians expecting a state tax refund have been told they might get IOUs instead. State workers may be forced on paid furloughs, cutting their pay by 10%.
10% is somebody's car payment or their gas bill. Please stop picking on us. That's all right. We do your work and we're good employees.
California may be the worst, but it's not alone. 37 other states face gaping budget shortfalls this year. In Iowa, schools are taking a hit. In Kentucky, library hours cut. The governor of Minnesota says cuts in state services are inevitable to close a $5 billion deficit. All 50 states are required to balance their budgets, but California is one of only 3 requiring 2/3 of the legislature to pass any tax increase. Republicans in the legislature have sworn never to raise taxes. Democrats say this problem is too huge to solve with budget cuts alone. It all should sound familiar to Arnold Schwarzenegger, swept into office on a wave of voter discontent when his predecessor, Democrat Gray Davis, failed to pass a budget. Republican Schwarzenegger promised to fix the political impasse and to cut taxes, especially the much-loathed vehicle licensing fee.
Hasta la vista, baby, to the car dogs.
5 years later, the deficit has mushroomed, and Schwarzenegger now says new taxes are necessary, maybe even that despised car licensing fee.
This problem gets worse every day.
On that, all sides can agree. Bill Whitaker, CBS News, Los Angeles.
Still ahead on tonight's CBS Evening News, intrepid Cubans finding a way to keep half-century-old Harleys on the road. And when we come back, remember all those people who thought they'd get big bucks renting their homes for the inauguration? Well, maybe not. And what happened over the weekend here. All of this said, the financial experts will tell you this is not a reason to run to the bank. The vast majority of banks, 98% of them, are still safe and healthy and stable. Maggie?
Jeff Glor, thank you. Let's talk more about it now with CBS News business correspondent Anthony Mason. Anthony, good morning to you.
Good morning, Maggie.
Lessons from this weekend. First of all, pretty clear the government is not going to bail anyone else out. At least that's the message they're sending.
More than clear, loud and clear. In fact, when I was talking to folks at the Treasury on Friday, they were saying, look, we're trying to find a buyer here, but let's be clear, we are not going to use taxpayer money. Now, I think some of the financial firms doubted that. This weekend they found out. We don't have Lehman anymore.
Which must be huge for AIG. This major insurer needs $40 billion. Where's it going to get it? And if it doesn't get it, what will happen?
Well, they've asked for a line of credit, a $40 billion line of credit for the government. At risk are their credit ratings. They're worried now. They could be next. And what you saw with Merrill over the weekend in them agreeing to be bought out is essentially them trying to avoid this whole problem.
So Merrill Lynch set an example for other troubled companies this weekend. It saw it coming. It said the government's not going to bail me out. Let me lower my price and and sell myself. Do you think we'll see more of that happen?
It's very possible you will see some consolidation here to basically shore up their lines of cash. That's been the big problem. Merrill had almost $50 billion in losses related to the mortgage problem. There were all kinds of doubts. There were worries going into yesterday that if Lehman went down, Merrill would be next.
And it didn't, so can we seek some solace in that?
I think what a lot of people are hoping at this is actually going to be the bottom, that the financial industry is trying to finally get itself all organized, sort this out, and create a bottom here, but we're going to have to wait and see.
And that's not what Alan Greenspan said. That's the one thing in Jeff's piece that stood out to me. For him to say that we haven't seen the end of it.
Well, you are probably going to see some more changes on Wall Street. The question is, what are they going to be? And we're going to have to wait a few days to see how Wall Street absorbs all of this. You're going to see a big drop at the start of the market today, though.
You're a consumer. I'm a consumer. What do you do? What are you thinking?
Well, the thing that we're most going to be affected by is if you're going to be looking for a loan right now, it means banks are going to take less risks. It's going to be harder to get a loan still or prolong this whole problem where credit's been really tight because the banks are scared. That's why nobody wants to buy these companies. They don't know what's in them, so they're not lending money right now.
All right. Anthony Mason, thank you. Appreciate it. We'll have more coming up on what you can do to keep your money safe. Right now, let's talk about Hurricane Ike.
Big news there, of course, this weekend, Maggie. At least 28 people died as a result of the powerful storm, and 2 million people are still without power. CBS News correspondent Mark Strassman